Welcome back to TV5 News at 9. It is time now for Financial Wellness Wednesday with TriStar Trust Bank. Now, we're here with Anthony Taylor this morning. Thank you so much for joining us.
Thank you for having me.
Anthony, we have a scary topic that we're going to start off with this morning, talking about stocks and actually managing those risks. What are those risks? And tell us a little bit about if you are getting involved with stocks.
I think if you're just starting to be involved with investing, that ultimately comes down to knowing who you are as an investor and understanding what your level of risk is. And what I mean by that, as advisors, we can give you all of the best advice in the world, but at the end of the day, we don't know how you're feeling here in your heart as far as what level of risk you're willing to take for the level of reward you're willing to receive.
So tell us a little bit about some of the misconceptions of risk and diversification.
Well, I think diversification is just one of the many techniques you can use to reduce risk within your portfolio. Ultimately, there's two types of risks that every investor is going to have to face or accept. That first type of risk is just general market risk. This is risk that cannot be diversifiable. These are things that are really not tied to a specific industry or company. These are things such as inflation, political instability, war. They're things that are going to affect all types of investments. And then the second type of risk is diversifiable, and that's just the way that you go about doing investments, whether that you invest in stocks, mutual funds, if you dollar cost average, if you spread your investments across different countries or different types of companies. So there's a number of ways that you can mitigate risk in that sense.
So there's a lot to think about. You know, a lot of people don't know when it comes down to investing the difference between investing in stocks and mutual funds.
You know, that's a great question. I get that from time to time, and years ago in a meeting I boiled it down to a bowl of chocolates. And what I mean by that is right here, this bowl of chocolates here, every one of these pieces of chocolate represents a specific stock, and each color of chocolate might represent a specific industry or specific sector of the market, but all together in the bowl, this resembles a mutual fund. So ultimately, if you're buying a stock, you're buying an individual company or piece of chocolate, but if you're buying a mutual fund, you're buying a conglomerate or a group of stocks that represent either one specific industry or sector or multiple industries and sectors.
I love that. Okay, that's great when you have a visual to kind of help explain something. Now, what are some ways that you can manage your risk in your portfolio?
There's a number of techniques that you can manage risk in your portfolio. One of the most important things is having the proper asset allocation, and really that's just a fancy word for saying how many stocks versus how many bonds do you have in your portfolio, or how many equities or fixed income or other instruments. So it's a way to manage, again, that level of risk versus level of reward. Another way you can do that is through proper diversification. And then if I had to think of a third one just off the top of my head, I would say that you can dollar cost average, meaning that you're saving into the market through a variety or different periods of time. So many of us do this already in our 401ks or 403bs, where every couple of weeks our payroll goes directly into that. So you're buying in high, you're buying in low.
Okay, so as you're thinking about all the things that we've talked about already, what is something else that you can think of that we need to be concerned about when it comes to stocks, mutual funds, investing?
I think at the end of the day, it comes down to, again, working with a trusted advisor, understanding who you are and what level of risk you're willing to take on with a portfolio, and understanding that there is no way to completely eliminate risk in investing. So it's just something that you have to accept.
Okay, so if you want an expert who can explain this to you about what these chocolates are and how to understand the differences of risks and portfolios, stocks, make sure you go to TriStar Trust Bank. Thank you so much for joining us today. And head on over to the hot link section of WNEM.com for more information.